Welcome to Walker's Market Weekly. I'm RK Walker, coming to you from my home while the New York Stock Exchange's floor is temporarily closed, bringing you a review of this week's stock market. Over the weekend, Saudi Arabia, the US, and 21 other countries agreed to collectively cut oil production by 9.7 million barrels per day. On Monday, West Texas Intermediate crude dropped among fears that demand for oil may fall as much as 30 million barrels per month, leaving a glut of oil in markets and possibly running out of storage. Markets also fell as investors anxiously awaited the start of earnings season. With almost 300 companies withdrawing their financial guidance and over 150 suspending stock buybacks or cutting dividends, massive uncertainty exists on just what earnings may be. The Dow Industrials closed 328 points lower, 10-year Treasury yields climbed to 0.76%, and gold increased 0.7% to $1,765 an ounce, its highest level since November of 2002. On Tuesday, import prices for March fell 2.3% and export prices fell 1.6% as demand plummeted due to the coronavirus. New York's Governor Cuomo stated that deaths from the pandemic are leveling off and hospitalization rates are slowing, while several states' governors are discussing how they will ease restrictions. JP Morgan and Wells Fargo reported sharp declines in profits as they set aside multi-billion-dollar reserves for anticipated debt defaults, and bank stocks fell sharply on the news. However, tech stocks did very well, with Amazon reaching an all-time high. The Dow Industrials ended the day up 558 points, with West Texas Intermediate crude dropping 7.7% to $20.68 a barrel, as investors continue to remain skeptical that production cuts would be effective in stopping the glut of oil. On Wednesday, retail sales for March showed their largest drop in history, plummeting 8.7%, while the April result for the Empire State Manufacturing Survey came in at its lowest read ever at minus 78.2. Industrial production for March fell 5.4%, while the housing market index for April fell 42 points to 30. The EIA Petroleum Status Report for the week ending April 10th rose 19.2 million barrels. These dismal numbers were even worse than expected, while Bank of America and Citigroup experienced sharp earnings declines as they collectively boosted their bad debt reserves to $25.6 billion. The yield on 10-year treasuries fell 12 basis points to 0.63%, while West Texas Intermediate crude fell further to $19.87 a barrel. The Dow Industrials fell 445 points. On Thursday, housing starts for March fell 22% to an annualized 1.216 million units, and the Philadelphia Fed Business Outlook survey for April fell 43.9 points to minus 56.6. Jobless claims for the week ending April 11th totaled 5.2 million, bringing the total loss of jobs during the coronavirus outbreak to 22 million. New York Governor Cuomo extended the shutdown of non-essential businesses to May 15th. The Dow Industrials didn't move much. However, the NASDAQ 100 jumped 2% and erased all of its losses for 2020 on the strength of tech stocks perceived to benefit from the stay-at-home trend. On Friday, stocks surged at the open on reports that a therapeutic drug being tested by Gilead Sciences showed some effectiveness in treating the coronavirus. However, shortly after, markets backed off some of the gains. China reported that its first quarter GDP contracted by 6.8% year over year, the country's first decline since official records started in 1992. Bonds opened lower, with 10-year treasuries yielding about 0.6%, and West Texas Intermediate crude also opened lower at $18.06 per barrel as concerns continued over excess supply. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.